As far as, the sector down so hard today, the earnings off, the oil price underlying down. What's going on?
Well, essentially, so Shell's profit missed analyst expectations, which will have obviously an immediate impact on shares. The really interesting thing, though, to note is that cash flow reached its highest level in 10 years. And also the company's announced its second tranche of share buybacks, so it's ramping up its share buybacks. So that will be really positive news for investors. It's generated the most cash, as I said, in a decade. It's comparable to the levels of when Brent crude was trading around $110 a barrel. And if we bear in mind that crude price is now around 75. I mean, that actually is quite impressive, considering or despite the fact that the analyst estimates were missed.
Yeah, what's the contrast here with BP? We saw a very different story on Tuesday, big beat in terms of the numbers over the quarter.
We did. So BP absolutely smashed all analyst estimates of its profits, and that was to do with a variety of things. I mean, the rise in crude prices that we've seen over the quarter being a key factor. It's also had various upstream projects that have come on stream. And as you mentioned in your intro, it's now announced that it's going to fund its $10.5 billion shale acquisition through cash. So, yes, I mean, both impressive results, but, in their own way. So I think that the key thing for Shell right now that it's going to be focusing on is that share buyback program, regaining investors' trust, and as it's similar with Total as well, where they announced a surge in earnings, but their focus is very much going to be on capital discipline.